So Dow Jones, and we come back to the well after making a small profit on a time stop of a previous structure on a break of this grind line over here. That was a while ago. That said, it didn't make full target before timing out, so we locked in a small profit. We pointed to the rising wedge here. We have other structure that's bespoke to the HVF method that we've been involved and engaged in and trading with. And that's served us quite well, and we've back short and have been short on a rollover structure in a macro setup on the Dow. And the S&P is in similar trouble, it has to be said, it seems. And you've got a situation with the dollar. You've got a situation, I think, with the euro bank starting to show up. The dollar's getting relative strength again to the euro as our dollar strength call from 3 weeks ago is starting to pay out. This is leaning on the stock market, and it's also the worst season of the year coming into summer for the stocks. So it's not a bad time to get structure and a pattern that we like. So we are short. We also, so in terms of our commodities, equities environment, I just flick over to this channel. We are, let's just go through it. That's your spider, which is in similar structure. That's your S&P. I elected for the Dow in the end because the first structure was great, slightly better for me. We shorted on a rally high and closed, as I said, on a time stop, and we're back short again on the turn over there. So that's the entry on that. We've had successive days with it selling. It stood on a line there, which has tried to hold the rally, saw it spill back down, rally and down. So this ties into a bit of a bad spell for US equities. This potentially is what we call the slap in the face change in trend event. It doesn't have to be, it could be. They often run into that kind of scenario. We've been very, very high on equities, and we haven't printed money in a while, which typically boosts equities. So in this, it's a mug's game, by the way, getting shorts right on indices. It's not one I want to play too often, but when we get good structure, we do get involved because potentially the rewards, if it is the big spill, but nearly always you're going to be incorrect. So it's we've been fortunate with that one, and we're back short again. But it ties in with Trump's tweets, for example, on currency, because as the dollar effect is not insignificant. It also ties in a little bit with the outlook for individual equities. You might know also from the other release we did that we shorted NCR on a gap. Its earnings seen largely as disappointing, and we have a lower target. So we got in short, and then we got a gap on the earnings announcement that we were expecting. To be clear, the target is 21. We never said it would gap to 21. We said there's a likely gap opening to the downside. Some people don't understand what we're talking about when we're making these calls. So equities are a little bit off in the US side, and the indices are pretty soft, and it is the time for that. So just think twice about going long on your equities. The other interesting correlation is Bitcoin and the cryptos are recovering. So I wonder if a bit of the fear element is actually seeing some money come back in. Will it be? I've been waiting to see the correlation on that as an asset class versus indices and equities. Will there be one? Does there need to be one? Will it chop and change? How is it all going to play out? It's not quite clear to me on that side as yet, so I don't know. But I'm certainly observing, and at the moment it's inverse correlated. So just watch out. We are short. We're fairly tight stops, and we're looking for further downside on the indices, but it could just rally. You see, these levels have been key zonal rallies, so don't expect it to run this. If you're not in this trade, first of all, nothing I say is ever a trade recommendation. It's just showing you what we're doing in our community and how and when we're choosing to get in, and I'm giving you very little information on how and what the structure is, but it is all in there. We have method for it, but you might get quite a bit of rallying at this zone In other words, there's a defense. I hesitate to say plunge protection. It's kind of like conspiratorial, but you've got a level where certain people perceive value buying. You've also got guys that can borrow to buy their own stock. So you might, certainly in this indice, we tend to get a bit of support here. So the big break that will really give confidence to the downside move will be, running these lows, properly running these lows. And there was an extreme low here at around 23,000. Which is still some way away. So you're getting weak rallies for now, and you might need a little bit of additional structure before we smash home. And of course, this will be a point of invalidation for this particular entry, and I would say the whole structure is spoiled if you run there. So we'll see. We'll see what comes of it, and we'll see if we take profits on that, whether we time out or whether we'll actually get stopped out. It's all still in the mix, but equities are broadly weak and unreliable, so watch your longs. And we'll see also what happens with the NCR trade, which is still only about 40% of its way to target, and we'll keep you updated. Okay, I hope you enjoy the video. By the way, themarketsniper.com, it's not for everybody. If you want to learn method, mindset, and be part of a community that's trading a number of markets, of which FX, equities, and commodities indices are part of that, you can contact us for further information. It's not for everyone. Click to get started to see if it's suitable. We have a free webinar where you'll get information on shorting, our take, and how it is the coming of age for a trader when you can make money in all directions. And even if you don't initially short, because it seems so hard for you to pull the trigger on, at least get into defensive positions on what you've made on the long side first as your interim step. How we expect and can take you to that side of things. Also, shorting indices, let me repeat, a very tough game in this fiat proliferation world where the money finds its way into speculative assets. So beware, it's not for everybody. Okay, talk to you later. I hope you enjoy the clip, and as I say, go to the website and check if we're for you by a short survey, and you'll get an invite on your email. Check your spam in case if you don't get the invite to the May the 17th 1930 webinar on becoming a short trader, what it's needed and why. Okay, talk to you later. Enjoy.